This is our contrast spec. Our underlying product is medium sour crude oil, and our product code is SC, which stands for Shanghai crude or sour crude. For the rest of the contrast spec, I will go through it in a later slide. A lot of people would ask why INE choose medium sour crude as the underlying quality. This is because medium sour crude accounts for more than 40% of global oil production. And in addition to this, for China and its neighboring countries such as Japan and South Korea, medium sour crude is the most widely used feedstock for the refineries, and it is the crude stream that China imports the most. Based on China's import situation and the contract benchmark quality of API gravity of 32 degree and sulfur content of 1.5%, we selected 6 Middle Eastern crude oil and 1 Chinese crude oil as our deliverable grades. They are Dubai, Upper Zakum, Oman, Qatar Marine, Masila, Basra Light, and China's Shenli crude oil. All of this deliverable crude need to ship directly from the place of origin. Since INE is a globalized platform, there are 4 access modes for overseas investors. On this diagram, the first access mode is that overseas investors can trade through our domestic futures firm if they are familiar with China's futures market. But if not, they can choose the second and third mode, that is trade through an overseas intermediary. And then the overseas intermediary will execute order through a carrying broker, which could be either a local futures firm or an overseas special brokerage participant, which you can consider as overseas FCM. The fourth access mode is that an overseas investor can choose to become an overseas special non-brokerage participant to trade directly on INE. The oil majors, trading house, and a proprietary trading department of investment banks might fall into this category. And here just a heads up, overseas special participants, including overseas special brokerage and non-brokerage participants, can send orders directly to INE's matching system. But the trades should be cleared and settled by a domestic futures firm. So that means overseas special participants are similar to trading members. This slide is an overview of the contract size of global crude futures. Like many other contracts, the unit of Shanghai Crude Oil Futures is 1,000 barrels per lot. Assuming 5% as the margin rate, the contract is traded at $50 per barrel, and the RMB exchange rate against the US dollar is 7. The contract value would be 350,000 RMB. And the initial margin per contract will be 17,500 RMB. With regard to the tick size, ours is 0.1 RMB per barrel, which is almost equal to 1 cent US dollar per barrel of the mainstream crude oil futures contract. Our price limit is 4% above or below the previous day's settlement price. INE adjusts the price limit based on the market conditions, and a recent adjustment will be posted on our official website under the circular session. Generally, there are 20 contracts listed on our platform. The first 12 contracts are consecutive monthly contracts, and then followed by 8 quarterly contracts. This listed contract covers a time span of 3 years. The trading hours for INE Crude Oil Futures is from Monday to Friday, 9 a.m. to 11:30 a.m. for the morning session, 1:30 p.m. to 3 p.m. for the afternoon session, and 9 p.m. to 2:30 a.m. for the night trading session. INE will continue to observe the need for extending the trading hours, and we might extend it later according to the market conditions. With regard to our last trading day, it is the last business day of the month preceding the delivery month. INE is entitled to adjust the last trading day in accordance with China's national holidays, and usually INE will set the last trading day ahead of national holiday. The setting of the last trading day is depends on the delivery mode, and I will elaborate on it in the next slide. Here is an example of the comparison of the last trading day for different crude futures. The Brent crude futures is a cash settled contract. The last trading day for Brent is the last business day of the second month preceding the contract month. Therefore, for September contract, the last trading day is July 31st. For DME Oman crude futures, it is physical deliveries for shipping, so they need to leave enough time to prepare. So for the September contract, the last trading day is also July 31st. In terms of WTI, it is physical deliveries for pipeline, therefore it's much easier to do so. Their last trading day is August 22nd. While for INE, our delivery mode is physical delivery through the title transfer of the electronic standard storage warrant. So for the September contract, the last trading day is August 31st, which is the last business day of the month preceding the delivery month.